Okay, so this week we're talking about using accounts and preparing and maintaining a chart of accounts. Again, when we say chart of accounts, we're really talking about the roadmap for our entire accounting system. That list of accounts that we're going to use essentially is the basis for all of our financial records. It's very important. It's kind of like the structure of your house, so to speak. Correct principles for numbering accounts. We're looking at a very simple numbering system here with Delgado Web Services, but as I showed an example of in the last chapter, like for College Place Public Schools, these can be very complex, and some organizations may have hundreds, if not thousands, of accounts. What are maintenance principles for updating them? And what are the steps necessary to open general ledger accounts? So, what in the heck are these general ledger accounts? What's a ledger? What does that all look like? That's what we're going to chat about here. All right, as I get my notes up here. So first of all, we have this accounting form, and I'm always kind of have a little disclaimer here, and that is we're talking about a very manual, traditional accounting system here. And I know I said this a lot in the last chapter, but in reality, companies, even a small company, would spend the money to have a computerized system such as QuickBooks. And this blank account form is the paper version of what a T account might be that we learned in chapter 2. So this is kind of an extension of what we learned about T accounts. And each account title used for recording entries in that chart of accounts um, is part of a group of accounts arranged in specific numeric order. And we'll look at that again when we look at the chart of accounts. And also that post reference section there you see on the blank account form here. That's where we would put the page number of the specific journal that things were posted from. We always want to be able to cross reference anything in our account form which is within the general ledger. We need to cross reference and be able to quickly go back to where did that actually come from on, say, from chapter 3, our multi column ledger. All right. And then again, like I said before, this is a very manual system with the traditional green accounting paper. Whereas I said, I keep saying this, we're learning the theory, we're learning the manual system, and from this, you would be able to understand better how a actual computerized system would work. So a computerized system takes these same principles and puts them in computerized form. And you would see a form like this, similar even in a computerized system like QuickBooks. All right. So next we have relationship of a T account to an account form and information needed to trace back to the journal entry. We, of course, need to make sure we have an account title in here. All right. Then when we drop in what we remember from chapter 2 about the T accounts, debit being the left side, credit being the right side, as we post into our account form, into what we call the general ledger, we're posting debits and credits from each account into each account as activity appears in the multi-column ledger. Again, there's a very simple sole proprietor, single person business. It gets more complex as we move forward. And then when we're done here, we will balance these columns. The assets will have traditional balances of debits, and the liabilities and owner's equity accounts will have traditional balances of credits. So again, we're just building on what we've learned here in the past. And we come to the chart of accounts here, and we looked at this a little bit in previous chapters, but understand that all accounts in the chart of accounts will have an account form, just like we saw in the previous slide, in the general ledger. All right. Excuse me, and I need to sneeze, and I'm not editing that out. Sorry. And then we have divisions within the chart of accounts. You see, like the 100 series of accounts have for assets is the 100 series, and you have cash, petty cash, accounts receivable, supplies, prepaid expense. Those are all assets, and they start with 100, and we number them every 10. We skip around. We skip 10 for each one in the second column there, 110, 120. And specifically, the assets are kind of unique in that they are ordered in or put in order of liquidity. My goodness, what is liquidity? Liquidity is how quickly can we turn something into green stuff, into cash. Cash obviously is about as liquid as it gets, all the way to prepaid insurance, where we've paid an insurance company in advance for, say, 6 months of liability insurance. Well, that's a little bit harder to turn into cash, isn't it? Supplies, we'd have to take them back. That gets kind of weird. So again, order of liquidity for our assets. And owner's equity kind of follows the capital account, owner putting money in the business, drawing account, owner taking money out of the business, and then a new account, which we're going to talk more about in chapter 5, income summary, which is essentially a rolling up of all of this stuff over here on the right, all of our revenues and all of our expenses, which we've been looking at in previous chapters as being part of owner's equity. Now we're kind of splitting it out and putting it kind of in its own area called income statement accounts. And later we'll learn about how these are temporary accounts as opposed to permanent accounts, which show up in the what's called the balance sheet. So now we're starting to talk about actual um, financial statements, the balance sheet and the income statement, and classifying accounts in that manner. But here you can see your various divisions: assets, liabilities, owner's equity, revenue, and expenses. And expenses are almost always placed in alphabetical order, your operating expenses of a business. All right. So that's kind of a flyover there of the chart of accounts. And we talked about the divisions and things like that. And then also you'll notice over here in expenses, excuse me here, I just got to go backwards. Over here in expenses, we have a couple new items which we're going to explain it in, probably more in chapter 5 as well. We have insurance expense. We also have prepaid insurance as an asset. We have insurance expense as an expense category. And then we have supplies expense. Well, we already have a supplies over here in assets. So that's going to be something, again, we're going to touch on in chapter 5. What's insurance expense? What's supplies expense? How does that tie into what we have over here in our assets area? Okay. And your account numbering system, which with us is 3 digits, is often determined by really the size and nature of the type of business we're talking about. Here we have a really simple sole proprietorship. It gets more complex the larger your business becomes and the more you need to track things. All right. A group of accounts is called a ledger. All righty. A ledger that contains all accounts needed to prepare financial statements is called a general ledger. So we're throwing everything in the chart of accounts is going to have its own account form in the general ledger. The name given to an account is known as an account title, which we have talked about account titles for quite a while here, for several chapters. Things like cash and accounts payable and accounts receivable and things like that. And again, the owner decides, the owner decides what the account titles are going to be. I have a really happy mouse, by the way. The number assigned to an account is called an account number. So every account in our general ledger is going to have an account number and an account title. So when we look at the subdivision here, the general ledger division 1 being asset, we're analyzing, excuse me, supplies. Location within the general ledger is going to be down here 150. General ledger division 1, excuse me, 50 is going to determine where it falls inside of the asset division. All right. So yeah, we're just kind of showing you supplies there and where and how that, the logic behind where that falls. All right. Continuing on talking about the general ledger and accounts. The procedure for account arranging accounts in a general ledger, assigning account numbers, and keeping records current is called file maintenance. And file maintenance, like, well, okay, whatever. What does that mean? File maintenance is extremely important because you want to have an organized, logical accounting system that can easily be picked up by not just the owner. Maybe they have the owner has somebody come in and do financial records for them. If you can keep it simple and well organized, it just makes your accounting system that easier to manage in the long run, as opposed to things just kind of being somewhat random and disorganized. So let's say that we have our chart of accounts here in our expense area, and we decide, oh, we want to add some new accounts. We have miscellaneous expense and supplies expense. And again, our goal with our expense accounts is to keep them in alphabetical order. And also understand that expense accounts are often determined by, as people within the business have various tasks or things related to the business, they will use specific accounts to record the activity of whatever they're working on. And again, there's that one item here, miscellaneous expense, where the owner will just say, I don't really want to create a new account every time I have some new activity. I might just call it miscellaneous expense. And then if it's something later on I want to track, I can start creating a special account for that. But just to kind of show you what that looks like, if we were to add an account, say postage expense, we want to drop it in, put a 5 at the end of it so it lands between miscellaneous and supplies and allows for more room if we want to put another account in between that, postage expense. And then at the end, let's say, well, maybe we want to add water expense or utilities expense. We could put that at the end. All right, maybe it's important for us to track the amount of water usage we had. Now, this was at Seneca Foods, one of my last companies. We had a giant natural gas pipeline, and we spent thousands of dollars a month on natural gas. That's something we definitely would want to keep track of, really on an individual account basis and not just call it utilities. All right. Writing an account title and number on the heading of account is called opening an account. So we're taking something from the chart of accounts, and now we're putting it into our ledger and creating an account form for that. Plus, we're doing the same process and adding something to the chart of accounts at the same time. So here we're opening an account in the general ledger. Again, every account, excuse me, will have an account form in the general ledger. So we put the name cash up there at the top, write the account title cash after the word account in the heading. And you would do this, by the way, with a computerized system as well. There's cash. Then we'd write the account number 110 after the words account number. Now we have an account form in the general ledger that we're ready to take entries from the multi-column journal and record activity in here as we keep track of cash. There we go. So here are two questions for us. First of all, well, I'm going to say too that ledger accounts are kept in chart of accounts order on that previous example we had. And also, we need to make sure that new ledger accounts can easily be inserted into our general ledger. So describe the two parts of an account. We talk about that account number. The first digit indicates, let's go back again here. Again, this is live. The first digit indicates in which general ledger division the account is located: assets, liabilities, equity, expense, revenue. I kind of reverse the order of those last two. And the second and third digit indicate the location within that division, 110, 120, whatever, for assets, where that count is going to fall within that division in our chart of accounts numbering system. List two steps for opening an account. Write the account title after the word account. Write the account number after the words account number. All right. There you go. And you've created a entry for your general ledger. All right. Let's go to MindTap here. And you might want to pause the video because I'm going to kind of just keep rolling here. But if we go to MindTap and MindTap, where did you go? We don't know where it went. I have to go back to my email. Here we go, MindTap. All right. I'm going to go to Working Papers 4.1 and Work Together. And again, this is largely going to be a review of stuff we've had from previous chapters. And here we have Isabel Seville owns a service business called Seville Company, which uses these accounts. In order to create a chart of accounts, you must first classify each account. And we've been classifying accounts for like 3 chapters now. For each account, select the type of account, assets, liabilities, owner's equity. And again, we're breaking out revenue expenses now from, we've been kind of throwing it into owner's equity. Now we're splitting it out kind of on its own here in the appropriate classification column. Accounts payable, well, it's going to be a liability that's going to show up in the balance sheet. Accounts receivable, where a customer owes us money. And maybe you want to pause, make sure that I'm not like rushing ahead here, that you're tracking here. Accounts receivable is when they owe us money. That is an asset. That's going to be a balance sheet account. That would be like a 100 series. Liabilities would be like a 200 series. Accounts payable, Anoka supplies. Well, we're back to a liability again on the balance sheet. Again, assets on the left, liabilities and owner's equity on the right. Accounts receivable, Greg Verez. Again, that's going to be an asset. Miscellaneous expense. Well, I think you can see that's going to be on the income statement as an expense. Insurance expense. Again, we're talking about insurance that we've used up during a period as opposed to something that's prepaid. Again, we'll get more into that in chapter 5. That definitely is going to fall as an expense on the income statement. But prepaid insurance is insurance we haven't used up yet. It still has maybe several months of value. So we're going to record that as an asset. We'll talk later on also something called the matching principle during a particular accounting period. Isabel Seville drawing. Well, I'm sure you can see that's going to be an owner's equity where the owner is taking money out of the business. All right. Cash. Oh, yeah. Cash is an asset. Yes. Sales, where we sell stuff. It's in that revenue area, that 400 series of accounts. That's going to be in the revenue area. And then we have supplies. Now, let's not confuse supplies with supplies expense. Now, I'm running out of room here, up here on top. All right. So I'm going to say supplies is an asset, supplies we haven't used yet. And yet supplies expense is going to be over here as an expense item. Again, if I scroll up, I'll see that I've got expenses over there on my income statement. Automobile expense on my income statement. Isabel Seville Capital, that's going to be in your owner's equity area, right? And rent expense, of course, is over in there. All right. Now tell me I am on my work together. Yes, I am. All right. So there you go with that. And we're going to grade step 1. Hopefully I got 5 out of 5 on that. 1 out of 1 points. Next step. Assign account numbers. Okay. Well, let's see here. Now that each account has been classified, assign account numbers to each account. You must assign account numbers that accounts receivable, accounts payable, expense accounts are in alphabetical order by last name in the case of accounts receivable. Use a 3-digit account numbers and the number of the accounts within a division by tens. Oh my. All right. Well, I would say maybe we start, if we're going to start, it says, wait. Now they're saying accounts receivable, accounts payable, and expense accounts are in alphabetical order by last name in the case of accounts receivable. Okay. Well, I would say we start with cash. Cash is maybe 101. Okay, order of liquidity, if I'm doing that. I'd say the next accounts receivable account is going to be Greg Verez, and that's going to be 120, I believe. Accounts receivable L North alphabetically is after Greg. I'd give them maybe 125. No, they wanted 130. They said by 10, right? Said order by tens. Use three-digit accounts and number the accounts within a division by tens. Okay. Supplies would come next. I would think that would be 140. Let me go back to my cash. Cash is 101. That's it's kind of bothering me, but anyway. And prepaid insurance would be 150 if I'm going every 10. Okay. Accounts payable Anoka supplies would be my next 200 account. Again, assets 100. Liabilities, I'm going to call that 201. And my second accounts payable account is going to be apparently 220. Is there a 210 there? I don't know what to do here. Number the accounts in a division by tens. Well, I'm going to follow directions here. I'm going to call this 210, that 220. I'm going to call cash 110. There we go. That's better. Owner's equity, capital is going to come first. That'll be 310. Drawing will be 320. Again, you would do this in real life if you were setting up a chart of accounts. Sales is going to be my 400 series. We're going to call that 410. Then we get in expenses, and expenses we want to organize in alphabetical order. Automobile 510. Check my alphabet here. Insurance 520. Miscellaneous 530. Rent expense 540. Supplies expense 550. Now I can see where some companies might actually put miscellaneous expense at the very end because it's kind of a catch-all. So there you go. How do you think I did? I think I did good. Again, order of liquidity for your balance sheet asset accounts. Grade step 2. How did I do? It didn't like my accounts receivable Greg Verez and L North. Wait, where did I go wrong with that? Oh, by last name in case of accounts receivable. I wasn't reading the instructions right. Verez comes after North. You probably caught that. Okay, I missed that one. Now I know to do that correctly in class, right? Next step, new accounts. Okay, there's my accounts. There's what we set up. We got our chart of accounts. Mrs. Seville has been classifying postage costs as miscellaneous expense, but has found the amount paid each month for postage has become a major expense. Has decided to use a separate account, postage expense. Also, a new account, utilities expense, is to be added to the chart of accounts. Okay. Account number, what should be postage expense? Between miscellaneous and rent expense? Between 530 and 540. That looks like 535 to me. And the account number blah, blah, blah should be assigned to utility expense. Well, that's at the end of the row here. So I want to put that in as a 560 because it's at the end, right? A blank general ledger is shown here with the locations identified by numbers. Use the numbers to answer the questions to open the cash account. What is the value entered in location 1? Cash. Correct. What is put in location 2? The account number, which is 110. Grade final step. How did I do? 535, 560. Okay, I did pretty good on this assignment, except for I didn't follow directions as far as alphabetizing customer names. All right, save and continue. And from here, you will do the on your own piece in the working papers 4.1, and you will do the terms review for 4.1 to round out this particular 4.1 lesson. If you have any questions, let me know. Happy accounting.